Welcome to Bears in Exile. Today is Tuesday, July 24th. And this is the market overview, looking at the Dow, SPX, VIX, TNA, UU, PFXE, GLD, SLV, and all those other stuff. Things. Items. Starting off with the Dow, as usual. Another red, nasty little day. Last night we were talking about the bubble corrective move being complete, and we needed to see where it would go from there. Well, we ended up with what isn't a hammer. It is too fat, but nonetheless, it looks a lot like a hammer. And it probably is not a hammer, also since we had crappy earnings after the bell with Apple. Or at least they're telling us it's crappy. I don't really... Anyways, I'll get to that. So, wouldn't you know it, the low of today went right down, a small pierce, but essentially ended right at the major price consensus level before backing away. We were looking for a miracle rally in the daily running thread, and it did show up. So that was kind of cool. And the hopes that Apple would save us tomorrow, unfortunately, at this moment in time, seem remote. But nonetheless, we have 3 big red candles to the downside. That may mean something, but the futures are down a pretty good amount. Lots of disappointment in the after hours. And but beyond that, major price consensus level, we also came down and tagged the 200-day moving average. Backed away from it. I think that if we can have a close below major price consensus level, 200-day moving average, then yes, it's probably game over for the bulls. And we're pretty darn close to that, but have to exceed today's low. And what else is there to say beyond that? Well, we should have lots of support in this vicinity. We talked about that way up here. Major price consensus level, previous low, previous lows, plural, and lower price consensus level. And we know that there's lots of volume right in here. So to bust out of this, which really, I mean, that's the slightest of pierces today. So, to get through this, yes, then at that point, it's time to head for the hills, and I would imagine that we're going down to this low at the very least. But this should be a big hurdle. And there it is. Just like last night, all of the indicators falling. So, maybe I should have acted on that last night. But anyways, we're going to see what happens tomorrow. Probably open up nasty, but yeah, we'll see. 60-minute time frame. Are things overheated? Yes. Yes, they are. And if we go back in time to last night, we were talking about the 14-day RSI moving average. We didn't know if it would get to the bottom before... we didn't know if the stochastics would get to the top before turning over to join it on the way to the bottom. As it turns out, they turned around immediately today. And yeah, it was begging for a bounce. We didn't get it until the end of the day. It seems like when the 60-minute needs a bounce, it either happens at the beginning or it happens at the end. At least that's been the normal mode of operation the last month or so. And today, no different. Stochastics rolled over immediately, joined the 14-day RSI moving average. 14-day RSI moving average is at the bottom, and now we're having everything turn up. We noted the MACD histogram having a positive movement last night, and that continues today with a full-blown positive divergence. Be very interesting if we can get that bullish cross on the MACD. Should get a pop of some extent And that makes sense to me. There's so many people that are bearish now. The world's coming to an end. Those people need to be screwed. So got to get those people out. And actually, well, we'll see it on the TNA chart. I'll get to that point here in a few minutes. So daily chart, nasty, ugly, terrible. Right, getting right to support. And the 60-minute begging for a move up. And there it is. SPX. Oh yeah. More of the same. You'll notice that even though SPX is closer to this previous low, it has more distance between it before it starts hitting the major support. Unlike the Dow. The Dow is in the lead to the downside, and have everything ticking on down. Nothing different there. Beyond that, closing below the long-term moving averages, just like the Dow, bearish. And going to the 60-minute, is there any difference? No. Everything's the same as the Dow. Nothing to rehash here. Going on to the VIX. Yeah, you know, this is a nice looking chart. Has re-entered this channel that we broke down from earlier. Doesn't mean that it's going to do anything if we reach the top of it. But closing above the major price consensus level, it is bullish, engulfing yesterday's candle. Very bullish. And everything is moving on up. Very nice. And starting to work off the oversold in the heat map. Have a slight tiny little blurb in the adaptive RSI. Nothing major at the moment. But very, very positive daily chart. Absolutely. And above the all-important $20 level by, you know, $0.50. Not bad. 60-minute time frame. Are we overdone? Well, we have more and more green creeping in. And we have essentially everything either moving down or rolling over. So 60-minute definitely begging and pleading for a move down. First half of the day, second half of the day. See if that holds true tomorrow. And TNA. Oh yeah. Look at this awful little monster. I talked last night about inverse, or not inverse, haha. A regular head and shoulders. Well, that was busted out thoroughly today. Destroyed. You know, it's only going to have a day to reverse itself if it just wants to negate today's thing. Does it look like in the news that that's going to happen tomorrow? No. We closed right at it yesterday with the spinning top, and it took the plunge. What else is there to say? We already know the target. Target's way down in the about $39 area. Somewhere between $39 and $39.50, around about. And what could happen here? Well, we can break through, which we did today, have some kind of further down movement, consolidation, etc. It really should go up for a retest of the neckline at some point before it continues to its ultimate destination, assuming that it's going to go all the way to the bottom. So bouncing up here to about the $50 area or just shy. If it's going to go to the bottom, that'll be a really nice head fake that will catch a lot of people, catch a bull trap and a bear trap all in one. Now, it can reverse and bust through the neckline and invalidate this pattern, and that will be hugely bullish because failed bearish pattern is the most bullish pattern. So, very, very interesting. So, but I'd be looking for move down, move sideways, combination of the two, comes back up for a retest of that neckline, and at that point it's either going to crap out or shoot up. Could it be a straight shot to the bottom? Very unlikely, and anything is possible, but the odds should favor that it goes back up for a retest of that neckline. Standard analysis. What do we have? Well, we have everything moving down. CCI is losing some steam, which is interesting, different than all the other charts. Stochastic story semi getting low, interesting. It's possible that we could reach a bottom, move back up to reset with the 14-day RSI moving average, and then continue the movement down. That would fit in proper with a movement diagonally here of some sort, and then going up for a retest of the neckline that would reset the majority of the indicators, the secondaries, with the primary, the 14-day RSI moving average, and then could finish its movement to the downside. Something to be aware of. We do have a little bit of a problem popping up in the heat map. It isn't major yet, but it is starting to show up. Also something to be aware of. Oh, I'm going out of order, aren't I? Have to remain orderly. UUP, the dollar. You know, made a new high. Very impressive. Backed away slightly. It helped the market some. Got back inside the upper Bollinger Band, which is good and bad. Bad in that if it had been outside of it, been easier to call sideways or down tomorrow. But since it didn't, it can go up some more tomorrow. So, very interesting. But new recent high, very bullish. Should be retested at some point, if not exceeded. Everything is moving up indicator-wise. We do have some topping formation in the heat map. Nothing major yet, but too much more to the upside in a straight line, and I think that there will be a problem there. Good positive volume today on the dollar. People freaked out about Europe, which they should be. And that's about it. Obviously, no indication of filling this gap anytime in the near future. And we also have something of a double bottom here. So when we do turn around to come back and test that, that will be a significant level. And at some point it will be retested. No doubt about it. FXE. The euro. This one is more helpful now, isn't it? Nasty day, new low. Last night we said has to be the new low from yesterday. Has to be retested. It's broken. This one has to be retested at some point. Maybe exceeded tomorrow. All of the indicators marching on down. A little more hesitant than the dollar. Some things are already pretty darn low. But still, everything pointed down. So, gotta give it its rightful due. Problem area in the heat map. It hasn't gotten extreme yet, but it is getting darker. So, possible problem. Going on, ComQ. The NASDAQ. Ooh. Bearish engulfing. We have a possible line of support here. It was pierced, not closed below. Getting to an area of support. Major price consensus levels. Previous lows. Lower price consensus level. 200-day moving average. But we do have good alignment in the indicators. Everything moving down. Nothing in the heat map to stop this at the moment. This is rather poor looking. A little farther to go. 28.40. That should do something to it. We shall see. And Apple. Ooh. Did not have a good day leading up to earnings. Still above the long-term moving average bar. And they didn't like the numbers. I thought the numbers were pretty good all things considered, but it is what it is. And at this moment, it is at 567.80, putting it way down here. Look at that. That coincides with almost with this low right here. So very interesting if it's able to close below that tomorrow. I think it'll bounce personally, but that's my guess. But lots of cheating. That'll be a gap below the long-term moving average bar. That's a gap below the major price consensus level. It's a gap below the lower price consensus level. It's going to gap all of this. Very interesting. And we have been watching the stochastics go down, CCI go down, bearish cross on the MACD histogram ticking down. As of last night, actually last night the MACD histogram hadn't finished the bearish cross, but we had seen the CCI and some other things tick down. 14-day RSI moving average going sideways. Probably be enough tomorrow to get it to tick down. Overall, poor looking chart, but is there going to be some reaction with this bottom area? That is the question. And GE, trying to get a better read on the Dow, ending with a hanging man, not at the top of a range. Nothing spectacular in the heat map. Mixed on the stochastic, down on the 14-day RSI moving average, up on the CCI, down on the RSI, slightly up on the MACD, up on the MACD histogram. Overall, more bullish than bearish. But we could get a reset of the secondaries and have them turn around and join the 14-day on its way down, which would be really, really bad for the market. We aren't going to know until tomorrow. But certainly, could we have pivot high, pivot low, lower pivot high? Yes, it's entirely doable at this moment. And yeah, that would be very bearish. JP Morgan, most important bank. Talked last night about it having a nice day, bullish engulfing, and we were talking about the problems that it has with the long-term moving average bar. And look at it today, even though it is positive, it is a spinning top, it wasn't able to conquer the major price consensus level. It did slightly pierce it and crapped out well before the long-term moving average bar. Exactly what we thought it would do. At this moment, it's supposed to, if we look at the recent past here, might go up a little bit more and turn red. Hopefully that won't happen, but certainly seems that that will be the likely outcome. 14-day RSI moving average moving down, CCI up, stochastics up, RSI up, MACD sideways, MACD histogram up, more bullish than bearish. Can you trust it to get through this? I say at the moment, no. XLF, the financials. Different than JP Morgan? Yes. Yes, they are. We do have a bit of a warning area in the heat map as to a bottoming area. You'll notice that the bottom tail is essentially the same as the bottom of yesterday, kissing the major price consensus level, backing away. CCI up, 14-day RSI moving average down, stochastics down, RSI down, MACD down, MACD histogram down. Overall, a bearish chart. Absolutely. 60-minute time frame, since this is banks as a whole. Is this needing a bump? According to the indicators, yes. 14-day RSI moving average up, stochastics up, CCI up, RSI up, histogram up, MACD getting a bullish cross. Would this be good for the market in the very short term? Yes, it would. And GLD. With all the fear, all the world ending, hanging man, Big long shadow. Not impressive. Still in this range. Still a mess. Mixed all the way around indicator-wise. Except for the fear factor of the world's coming to an end and gold should be going up. Is this really, really positive? No, it's still a mess. So, nothing to do with that. SLV. More of the same. Indicators are a mismatch mess. And although they are more negative than positive, so not as mixed as gold. And it's just in this flat range. Boop. Nothing to see here, nothing to do with this. This is worthless at the moment. Walmart, the former monster in my pocket. Any change today? Still have these fib levels. And look at that. Very interesting. We were talking last night about... I just think this is interesting. It should be... I mean, everyone's running to this thing. We had the bounce off of this bottom, which created this fib area. Came back up, hit the 66, went back down, got to 50. Now it bounced again today, spinning top, fat body, and look where it kissed. 66. Very interesting. These seem to be becoming more important. Actually, they've been important this entire time, desperately. But histogram down, MACD down, RSI down, stochastics mixed, 14-day RSI moving average slightly down, and up on the CCI, a big mess. I do think that this is going to crap out at some point. It's very difficult to figure out when it's going to happen since everyone is running to this for perceived safety. And quick Vegas baby. MGM last night. Saw this as a potential hammer. Didn't work out. Crapped out today. And very ugly. Everything moving down just as we noted last night. And unfortunately those are what's on the menu. Still have the positive divergences, but which are now more extreme. Let's see how that turns out. LVS. Also noted, perhaps it was a hanging man reversal. And no, crapped out today. And everything moving down, just like we noted last night. Even more extreme positive divergence. Oh, actually this one didn't make a new low. So actually the positive divergence is not more relevant on this one like MGM. And USO oil. Very interesting. Oil slightly positive today. Green spinning top inside the long-term moving average bar. And look at that. Everything is ticking down with the exception of the 14-day RSI moving average. This is definitely bearish in the daily time frame, which is bad for the market. How about that? Of course, news can change this, just like the news can change any of the charts, but it is what it is for the moment. And why not? RSP, equal weighted SNP. No crazy, one thing is half the market and all the other nonsense. Oh, this is a very different picture now, isn't it? Bearish engulfing, piercing the major price consensus level, making a new recent low, and everything pointing down. Oh, should have looked at that earlier. Overall, very poor for the market and breaking the 200-day moving average. Whew. Definitely should have looked at this one earlier. Very bearish. Very bearish. But 200-day moving average break at some point soon. That will have to be retested. You can see that by looking at its past. break, bounce, break, down, up, up, retest and get through, break, actually a gap through, sideways, retest and break, break and get back through in the same day. So here, pierce, break through at some point, not very in the distant future, should have retest and break back through, question mark. But yes, chart wise looks like it should go a decent amount lower, maybe even test this previous lows here at the lower price consensus level for the current month and the previous month. Terrible. Terrible for the bulls, great for the bears. Going to see what the central bankers can do about this, if anything. As always, all investing decisions are your own. This chart and video for entertainment, educational, and consumption of time purposes only. Thank you.